we really want to have a look at how Islamic finance has performed to date, and then we're going to start off with a little bit of a scorecard. And if I can ask Stella to kick off, how do you think Islamic finance is performing against the rest of the market and against our aspirations?
Our industry is really just starting out. You know, if we look at our financial industry subset in Islamic finance, we go back 5 years or more to 2014. I think that was really the first signs we had of engagement with core sort of impact, reflecting on impact, looking at responsible practices. And in terms of transactions, that was probably illustrated through the benchmark Sukuk issued by the International Finance Facility for Immunisation, $500 million to accelerate funding through Gavi the Vaccine Alliance, and also through the Malaysian government developing an SRI Sukuk framework, and subsequently that has supported the impact of, it has supported Impact Sukuk issued by Khazanah, the Malaysian Sovereign Wealth Fund, and also more recently by HSBC Ummahani with its Sukuk that was issued in support of satisfaction of the SDGs. There's been a smattering of issuance with a more typically traditionally green, environmentally considered alignment, and you were just referencing to sort of general purposes. And I think what the government of Indonesia has done has been great. You know, they have come out, they shocked the market to an extent that it was Indonesia with the sovereign green Sukuk. They've come back to the market. And also more recently this year, we've gone to corporate with Majid Al Futtaim with its issuance back in the summer. So finally, looking at the engagement and how Islamic banks perhaps find a wider entry point. You know, I have to touch very briefly on the SDGs, and the General Council for Islamic Banks and Financial Institutions, SIBAFI, focused its 2019 Global Islamic Bankers Survey on social and development issues, and forgive me if I read a little bit from SIBAFI. So 106 banks, 33 countries. The global outcome showed that goals related to economic growth and development are most important, and thereafter individual goals such as 4, quality education, and 1, no poverty. At the bottom were goals linked to climate, natural environment, and biodiversity. Now there were there's a sort of global approach that SIBAFI took, and then it broke the responses down into regions. And those responses, biodiversity and environmental considerations, were at the bottom in virtually every one of the regions, even though the responses were otherwise quite diverse and reflected regional preoccupations. So,
well, I've got on a scorecard, I'd say about 3 from the insurance market actually, out of 10. The insurance market itself has been very slow in providing products on a Sharia compliant basis. We as a broker house saw the opportunity and have actually gone out, travelled the world seeking capacity to actually be able to provide Sharia compliant contracts. We have actually now sort of just literally starting up a sort of a European-based insurance company to provide Sharia compliant policies into the UK and into Europe. But say as the insurance market's really doing anything, we've actually had Lloyd's giving lip service to actually sort of providing products. A lot of talk and no real action is my comment on from an insurance perspective anyway.
Mm. And actually for the insurance industry, you know, the whole social impacts of climate change in particular have massive implications for your full business, and we've seen the retreat from the insurance industry in certain
areas. You've actually seen a lot of capacity actually sort of coming out of the market because of the sort of social disasters which have been out there, both weather as well as actually individual. So yeah, we've got to actually look to try and bring that capital back in and provide those policies to actually people. And we have to remember we're trying to give people a choice, and people haven't had that choice over the last few years, in my view.
Talking about Islamic finance and being socially responsible or useful, I think we need to see more of commitment from the banking and investment institutions in terms of developing proper strategies as how they wanted to design and develop products that will finance and fund what we call the priority social sectors. And what I mean by this, housing, education, and healthcare services. We oftentimes in our studies and thought leadership events, we talk to experts, we talk to practitioners, and we ask the questions how Islamic banks can be more socially responsible. And we do have a lot of feedback from practitioners saying that we don't see real products that developed in these areas, creating jobs and developing housing products, for instance, so budget houses for graduates, for people to have a decent life. And I wanted to bring the issue of the Arab uprising the last 5 or 6 years. There's a lot of issues in the Middle East. Graduates are struggling finding decent jobs and looking for a decent life. Fundamentally, Islamic banks, as Rafi was saying earlier, that there are two core purposes for them. One is risk sharing, which we don't have an issue with that, but really creating and designing products that add value to the social is really still questionable. So we see a lot of, and of course in the Middle East we have a number of Islamic banks, but we don't see that these banks are committed and developing products that's designed ultimately to develop a social strategy or social goods, if you like, markets. Not much in the education or housing or developing local communities.
So some progress being made, but we need more ambition, and we need to drive that change throughout the Islamic finance industry.
Absolutely.
So that's a question to the driver of financial industries, Sultan. If you could think about how would you see progress being made most efficiently here?
Yeah. So thanks, Clare. I think one of the insights that I'd like to kind of remark upon is, and it would be an obstacle, a potential obstacle for developing banks towards social goals, is how ownership structures work. And as a CEO, and it's not talking about my own experience, I'm sure it's the same for the CEOs of all Islamic banks practically, is how do you move from one to the other, where you've got an explicit goal because of the ownership structure. They're usually owned by stock market listed entities, or they've got an explicit profit goal. How do you move to a wider set of socially purposeful goals? And I think that becomes that's kind of almost going to the enterprise level, but ultimately you have to deal with that, given that most of the players are Islamic banks. I think I agree very much with the comments from Rafi and Hatim, and largely I was going to echo some of those, but I'll just pick on items that I think need emphasizing. So you've got this, you've got a profit goal. How do you then direct your activity to socially purposeful goals? Right? So how do you direct, I don't know, for example, in the UK, to financing housing association, if you want to alleviate homelessness, or to financing a charity that might be actively involved in a sector of society tackling a social problem. Now that's quite difficult for a number of reasons that Rafi mentioned in terms of the way banks are operating today, right? So first of all, the goal, not exclusively, but mostly focuses on that stakeholder, the shareholder today. And actually, when you look at why Islamic banks were given a license, at least in this country, part of it was to sort of tackle financial exclusion and social, and thereby social exclusion. Somewhere along the line, aspects of that goal kind of just dissipated a bit. One of the ways of tackling it, other than going to existing organizations and trying to get them to change their goals or think of wider goals, I think that's worthy efforts, and I'd like to congratulate IFC on getting the SDG task force funding, so I think you'll do a great job on that. One of the ways is for social capital to start owning financial institutions. If social capital, so people who currently give to charities or currently give to charitable endowments, they start owning or initiating financial institutions, then there is no conflict. The social goal is there through the owners. You target consumers who believe in those goals. You fund projects where social entrepreneurship isn't required, and it becomes very much, a virtuous circle, right? And I think that's, if you just look at the way banking works, where your pound of capital can give you 6 times the amount of finance just through risk weighting ratios. Well, then that pound that you currently donate to a charity could be giving you 6 times the impact through a banking channel, a bank that's owned by, a social institution.
Everyone, and I'm going to tell you about the Nigerian experience about social impacts. We did the sukuk before the sukuk came on, the federal government sukuk. There was a sukuk in Osun State, a state of Nigeria, which dealt with infrastructure as well, building schools, which was quite successful. But for the federal government, it was like 3 years ago. It started with, and it was still infrastructure sukuk, which has really impacted on the Nigerian society, because people now were beginning to realize that Islamic finance is right on our faces. The impact is huge, is very important, and everyone was going around because the sukuk, we did the federal government sukuk, it was 100 billion naira sukuk, which was oversubscribed, the first one. And then the second one, the same thing, was oversubscribed. So Nigerians were beginning to be like, okay, so let's look at Islamic finance and how it can impact on the society. If you go on the roads, you will see specifically written federal government sukuk rules. So even, you know how Nigeria is very sensitive when it comes to Islamic finance, because there's a division, if you like, suspicious beliefs, Muslims and Christians thinking that Islamic finance is just for Muslims, and so we're trying to Islamize Nigeria and all that. And the Muslims thinking, oh my God, there is Islamic finance for us as Muslims. So now we've gone to a stage where, we're higher than the Muslims, the Christians. Remember, in Nigeria, we're 50-50 Muslim Christians, and it was a huge battle from the beginning to say, okay, this is Islamic finance. Sanusi Lamido, now the Emir of Kano, when he was at Central Bank, started Islamic finance, and he wanted an Islamic bank. He propelled for that. And it wasn't a huge success from the beginning, because people were very backwards. No, I don't want to touch that. It's Muslim. And the Muslims are. So Professor Munzal Kaf always says something. Islamic finance is not Islam. Whenever he says that, there's a lot of controversy. Oh no, how can you say that? But he is right. And that is what Nigerians are beginning to get into right now. Trying to say that, okay, this is very productive. It has brought a lot of goodwill to people, to people's lives. Now people can travel from one part of the road to the other because there's a federal government sukuk. They realized that the risks were minimal, almost none when it comes to investments. People are getting returns for their investments. So Nigeria is propelling towards that level where Islamic finance will come to stay. With banks springing up now, we just had one bank, Jaiz Bank. Now, the other bank is coming up now. Doctor, you are a part of our Sharia board in Nigeria, so you know a lot more about this. There's another bank. There are insurance companies, Takaful companies coming up. Just last month, 2 Takaful companies were approved by the regulatory authority. So we're looking at good things in Islamic finance in Nigeria, and hopefully everyone is beginning to understand that there's a correlation between financial inclusion and economic development. So people are beginning to say, okay, yeah, we're ready for Islamic finance in Nigeria.
Thank you very much. And consumer-led, it seems, and I think all in the sort of theme of the just transition, which is a theme around climate change being socially inclusive and ensuring that everyone is brought along, both whether it's a financial return or a sort of community return by investments. I think you're seeing that on the ground, on the roads specifically.